Okay, let's see if people can hear that now. Can you guys hear this? Does that work? Can you guys hear me? Testing, 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 testing. Please reply in the comments if you guys can hear me. All right, not sure what happened with Discord there, gang. Sorry. So, everybody, if you can you please let everybody in the Discord know that we've moved? I did tag everybody, but just in case. But yeah, not sure why that decided not to work. So, not sure what happened there, guys. Sorry about that, but that's okay. We're back. Everything's back and we're back to normal. And I can even record this one because this one is going to be most are out now. All right, perfect. Okay, so like I was trying to say, so let's just go right back from the beginning. So I've got Root on here, okay, and I'm going to try and help you guys figure out how to not get stopped out of trades too early because Root, too many people got stopped out too early, and so we're going to fix that, or at least give you the tools so that you understand how to fix it going forward, okay? And we're also going to incorporate a little bit of the moving average stuff from the last lesson on Sunday. Okay, so we've got all the moving averages right here for you. All right, so here's all the numbers that Jackie uses. So you can copy these or do whatever you want with them, but these are the ones that Jackie uses for day trading, scalp trading, everything. All right. So here is Root. And a whole bunch of folks on Root had positions that they established either here or 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 anywhere within this range, but you were likely underneath where Root was right here. So a lot of people were beginning to make money, and it was really exciting. So the first important thing to note, okay, with stop losses in a trade that is momentous. Okay, so you're taking a trade that is making a big move and you think that the trend is going to continue to the upside, right? And so, in order for you to not get stopped out, because you've already got a trade from down here and things looked awesome, and you're super jacked because you're making a bunch of money, right? And then Root makes this little retracement right here, and it touches the 8 EMA and it finds support off of that, right? But we can call this the first low, okay? I put air quotations around it. This is the first low that Root made, right? After its first initial, earnings little squeeze kind of thing that happened, right? This is the first low. So we identified right there, okay, that's a spot that we don't want to see Root break down. Okay, so we're holding positions that we bought from down here. Okay, we're just going to make an estimation that we bought positions from down here, right? So we've established a position from here, and now we've come up here. So we're already up a healthy chunk, right? We're already up about 43%. Okay, and now we're worried. We're like, should we take profit? Is it too soon? What's going to happen? Okay, so we use the moving averages. Right now, I'm on a 15-minute time frame. Okay, we use the moving averages to our advantage, as well as paying attention to these lows that we identify within this current little micro trend, right? And so if Jackie presses play here for a little bit and we let this go through for a bit, okay? Now, let's pause here for a moment. Now, first of all, okay, we notice that we have already made the push above this prior high, okay? So we're going to make things really simple. It's just straight up support and resistance, right? It's just straight up support and resistance. Here's our support. And we knew that if we broke this support, you were going to break the prior low in the trend, and you were very likely to come all the way back down and fill the gap that you made right here, right? We kind of already figured that out. But then we see price makes this nice, healthy launch, right? And not only is it a healthy launch, but it breaks the prior high, right? And as soon as you had a candle that broke the prior high, right, now we have something to this trade. Okay, now here's what Jackie thinks in real time, and this is how I trade in real time. Okay, so this thing starts breaking the prior high, right? Now I've identified that rather than keeping my stop loss where it originally was, right? So let's just say that I had set up this trade like this, right? Let's just say that my original Jackie target all the way, let's just say first initial one at 20 bucks, right? This was my original trade that you set up, right? And now it's broken the prior high, right? We've broken the prior high after the little squeeze event. And we said to ourselves, wow, that's super bullish. So rather than keep my stop loss down here, right, now I'm no longer worried about this thing filling the gap. I'm going to hold my profit. So what I do in this instance is now my stop loss gets moved all the way up to this original support level. Okay, this original low that we had made was a low that we have not gone back to. This means that this is the first established low within this trending range of price action. Okay, so now I've moved my stop loss up to an area where I am literally going to make, at the very bare minimum, if this thing collapsed tomorrow, I'm going to make a bare minimum of 33% because I have now moved my stop loss strategically into an area of support. So I give myself some buffer room, right? You don't want to put it exactly on the support. You want to give yourself a little bit of space in case they try to wick it, right? Because wicks, they're essentially just attacking liquidity and they're trying to get people's trades to stop out. So by systematically and strategically placing it just slightly below this low that we made, it allows me to put a stop loss in profit at a strategically smart place that makes sense, right? Because if root comes back down, right, and it comes here, this is the low that we first made. And let's say root bounces off of that low. That is a higher low. And so strategically, a stop loss being placed right at this zone makes a ton of sense now. Because if I think that root is going to continue its upward trend, this low cannot be broken. Because if it is, my trade's over. So by systematically and being smart, right, by placing the stop loss where I have now, I have guaranteed myself two things. One, I'm going to make it a bare minimum 33% on this trade. And number two, I'm placing it at an area that logically makes sense. If you break a low and you make a lower low, you are no longer uptrending. You are breaking trend. So by placing my stop loss here, I am saying to myself, if it breaks that low, we break trend, and then this thing breaks down, and I could lose all my money. But by placing the stop loss here, I will make at a bare minimum 33% from my original entry. So let me pause for a moment and let me just ask, does everybody understand so far what I am saying? Just going to take a moment to ask and just make sure that everybody is still kind of following along with what I've done there. All right, great. So I'm going to play this along a little bit more, okay? And then I'm going to stop it again when I identify what happens next and, again, how I traded this in the moment, okay? So we're going to press play, and we see root just continuing taps. Now, whoa, right there, right? Whoa. There we saw root begin to make a little bit of a retracement, right? And it looks like right here, maybe there's a little bit of support. Maybe this is like a support level, right? So let's continue playing this through for a moment. And then boom, root's off to the races, right? Okay, so we've identified something, right? In the moment, we saw that root had a retracement and found a layer of support and then popped off and then based above that support. So now I'm once again going to do the smart strategic thing, right? We have already made from our position to where root currently stands 123%, right? But there's no reason for me to close this trade out yet because we haven't done, right? And this ties into all the lessons that we've talked about. You have not broken trend. High, low, higher high, higher low, now a higher high. So we are very clearly uptrending, right? We're uptrending. Now, when we identified and we said to ourselves in this moment, hey, wait a second, is this support? It kind of looks like it. And it acted as support and we pushed off of it. So now I'm once again going to move my stop loss up to the next area of support. So now look at what has happened, you guys. We went from having a stop loss that was going to make us 34% to now our stop loss is sitting at an area where it's going to make us 74% at a bare minimum. If this thing collapses tomorrow, we're going to make a bare minimum of 74%. And then we say, why did we place our stop loss here? Why did it make sense to place it here? Because this is the next low, right? We identified a high, a low, a higher high, a higher low. If this is an uptrend, You cannot break this low. You cannot break that low. So if we want to continue making money on this trade, we're going to now take our stop loss that was once here, and now we're going to place that stop loss here, right? And the same concept remains. The same concept, just placing it slightly below the wick of the low in case they try to go at us for liquidity purposes, right? But so far, everything has gone in our favor. We haven't gotten stopped out, and we've made money. And all we've done is identified the highs and the lows, and then we've used those EMAs as support the entire way through so far. So let's keep going. And let's see. It looks like we're coming up. Now, let's pause right there for a moment. Now, we saw a ton of hesitation right here. This range right here, for whatever reason, this low right here appears to be an area of support. So we once again will take our little bar and we'll place it right there. And we'll say to ourselves, okay, in this moment, there are a couple of interesting things that have happened. Once again, we've made another high and another potential low, right? Looking pretty good. And now we've also made another higher high. Now, not only have we made a higher high, but then this is where we're going to use all of our technical analysis. We zoom out really quick and we identify, hold up a second, that's the Mega Macro 382 from the ultimate high to the ultimate low. That is a very key area of resistance that we just so happen to be breaking through. And so now I feel very comfortable placing my stop loss at this low that we made right here, giving myself a little bit of that buffer zone, right? And now my stop loss, remember how we were at 34%, then 74%? Look at this now. Now our stop loss means at a bare minimum, if the thing collapses tomorrow, we are going to make 125%. And look at our stop losses. We haven't even come close. We haven't even come close to stopping out yet. Not like literally not even close to stopping out yet, right? And so now we've once again placed our stop loss here. We're following those EMAs still. We're just riding them high, right? So let's continue on our way and let's continue to play this. Finding some support, finding some support, finding some support. Support off of that. And off we go. Now, let's pause once again. Look at this, right? High, higher low. Once again, now you have another higher high. Well, let's place that stop loss in another area, right? Let's once again move that stop loss up just below that Mega Macro 382, an area where we found support. And look at what I'm going to preach this time and time again. Look at the percentage gain now. You're at 153% and you haven't even sniffed getting stopped out yet. Not even close. Let's continue playing. We're waiting. Looks like it's finding support. On those EMAs big time. Okay, off we go. Now look at once again. You have another high and another low. Move that stop loss up to the next low. Give it a little bit of space. Now look at the percentage gain. It's getting a little bit ridiculous. Now you're at 194% and you still haven't even come close to stopping out. Let's press that play button again. Patience. It looks like it's basing. There's a new higher high and another higher low. Look at this, you guys. So now do the same thing, right? There's our new stop loss. Let's play it again. And look, I mean, you guys are going to see it all in real time. This is just such simple trading. And once you guys understand this concept of how to systematically place that stop, you guys will win, right? Look at this. This is very clearly a new low. This is another higher low, right? So move that stop loss up again. Now watch this. You have another higher high. So let's make another higher low. Basing. Okay, we have another higher low. Pause. So there's our next stop loss. Okay, let's keep going. That's almost a higher high, not quite though. Patience. We're waiting. Okay, there's a new higher high. Okay, So now you've officially made a higher high within the trend. So now we're looking, right? And we're saying to ourselves, okay, we only have the higher high, but not the higher low so far. These are higher lows, but they came before the higher high. So we're going to hold this stop loss right here, right? Let's just extend this over. We're going to hold that stop loss, okay? Until we confirm that we have made a higher low. So let's play this out once again, right? Haven't moved the stop loss yet. We're still making a shitload of money. Patience, 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 patience. Okay, we're going to let this continue to play out. Oh, we caught close. Oh boy, did we get close there. But what if that's the low? What if that's the low right there? What if this goes up and makes a higher high and that's the low? Right? Let's see what happens. Now you guys kind of already know what happens, but now patience, 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 patience. Here comes the explodey. And here comes bingo. There you go. Okay. So now we have a higher high again. And so we can confirm this as a higher low. So we can once again move that stop loss systematically up there, right? Now look at where you are. You have not gotten stopped out a single time, nor have you even come close. And look at where your stop loss is placed. Your stop loss is now guaranteeing you a minimum of a 330% gain. And you have not even come close. You have not even come close to getting stopped out yet. Okay? Now, I just seen a comment in there, why 15-minute time frame? 15-minute time frame is just a good macro time frame when you're trading on the 1 to 5 minute. So the 15-minute gives you a good kind of like macro perspective of things that you can see, especially while using these EMAs. But in the moment, Jackie is obviously using, like the 5 and the 1 minute. But the 15-minute makes it really easy to identify those highs and lows, right? It makes it really easy to identify those highs and lows. Okay, so once again, we're going to go ahead and play this through root. So we've got our stop loss set up here. So we're going to be patient. Let's see what happens. So now in theory, okay, root has actually made another higher high and a higher low. So in theory, we are supposed to place our stop loss up in this zone right about here. Okay, now once again, I'm just going to extend this. Okay, that is about where our stop loss is. And then you guys are going to see that we're actually going to get stopped out here for the first time. And here we go. We're pushing down. And there you go. Okay. So we got stopped out here after we traded high, low, higher high, higher low, higher high, higher low, higher high. Right? And then, so that's why we placed the stop here, is because this was a high, this was a low compared to here, right? So we said this was our low, it went up there, and then bang, we got stopped out. But let me show you something. You got stopped out at 444% gain. Could you have made more? Absolutely. Could you have made more if you locked in profit at the very peak? Absolutely. You could have made an additional 120%. But by systematically placing those stop losses through the higher highs and the higher lows, you allowed yourself to make 444% if you didn't take a single piece of profit that entire way up. Right? So that is one of the ways that you can use stop losses, and how you can use the stop losses in the middle of a momentum trade that you are trying to trade, right? Especially these ones like Root or like NVAX, for example, right? NVAX was another really great one when we were trading this prior to its earnings stuff, right? Because we were watching this and we were saying to ourselves, well, let's take an entry at the all-time low because that's where it bounced from. And then look at what happened. Higher high, higher lows, higher highs, higher lows. And then you had the huge squeeze. And then look at the squeeze run, right? It's the same things that apply with the squeeze run. You made this low, and then you made this high. And then if we put the replay thing on, right? That was your first low after the little squeezy move that we had, right? This was our first low. And so we said, okay, we're going to move our stop loss from an entry that we took down here. We're going to move that stop loss to the low here, right? And then let's play this through. It's the same thing as root, guys. I'm telling you, it's the same thing. So we're either going to wait for a lower low or a higher high. Well, boom, there's our higher high. Okay, there's our higher high. And we can identify this as a low. So we're going to move our stop loss up just below there. Once again, we're going to play this through, and you're just going to see it's very consistent. When plays like this happen, you can straight up just use these kind of momentum ideas and these areas of support and resistance. Right, here we go, moving that stop loss up again because we made a higher high and a higher low. Are we going to get stopped out? So spooky, oh my gosh, it's almost like we placed it perfectly. It's like we placed it where we were supposed to. Nope, didn't get stopped out. Now we've got a higher low, so now our stop loss is getting moved up once again. And how much of a percentage is that from our initial entry? You're already up, guaranteeing yourself 38% gain. Okay, go on. We've got a higher high. Are we going to make a higher low now? Can we do it again? That might be the higher low. It might be. Oh, no, we got absolutely dusted. We got dusted because earnings happened and it gapped down underneath our stop loss. And then we actually had to lose all that money down here. And that's why we don't gamble for earnings. But do you guys understand how that stop loss, right, systematically gets placed higher and higher until eventually we get stopped out? And when we get stopped out, it's not the worst thing in the world, right? We keep guaranteeing ourselves making more money, but we don't give back huge gains, right? That's just silliness. You can't give back large gains that you guys have made because a lot of you guys make huge trades. I've seen it. Some of you guys make like 10, 15, 20% on $20,000 account trades. And that's a huge percentage gain, right? And you don't want to give that back. So that's why we systematically move those stop losses up, and we don't need to assume the risk. We do the smart thing and we trade the right way, right? So I'm just going to ask really quick, does everybody understand? Are you guys all with me so far? What moving averages? I posted them at the beginning of the thing. Posted them at the beginning, so you're going to have to rewatch. Would you use sell stop limit in this case when you do sell stop limit? And when do you use sell stop loss and when do you use sell stop limit? That's a conversation for another day, but the sell, if I remember correctly, the sell stop limit means that it can't just wick into your stop loss. So when you say, yeah, so like a stop limit, it can wick into the stop loss, but it has to come back again for it to actually stop out. Whereas I think the actual stop loss itself is just as soon as price reaches your stop, it triggers the sell. And there's instances where each one has its own purpose, but I don't want to get too much into that quite yet. So when you say lock in profits, you mean move your stop loss. I mean do what's ever good for you. I mean do what's ever good for you. But like when I say take profits, it's because we're at an area of support or resistance. In Root's case, I was screaming at everybody that we should be locking in some profit here because this was a macro 3A2 and this was going to be a hard area of resistance. But it wasn't. It just basically blew right through it, back tested it, and off it went. And then we had a 60% probability of going to the 0.5 Fibonacci, which we achieved. And so when we had hit the 0.5 Fibonacci, I once again screamed at people, take profit, because it's an area of resistance. And it makes a lot of sense to sell at areas of resistance. It doesn't mean to lock in your entire position. You should never be locking in the entirety of your position, because what if a stock keeps going higher? Then you make more money. So just because you lock in a portion of your profits doesn't mean that you sell the whole thing, right? This is called leaving runners. And leaving runners is a way to expand your potential gains, right? What if some of you guys buy GameStop, right? What if some of you guys buy GameStop this week And then what if GameStop like gaps up to like 20? You're not going to sell the whole thing, because what if it just completely ignores Jackie and then this thing just keeps going and going and going and going and going and going and going? You're not going to want to have sold your entire position at 20 after this thing reaches 50, right? Because that would be dumb. The smart thing to do is when it reaches 20, an area of resistance, you lock in a good portion of profit, and then you move your stop losses up systematically the same way that I showed you with Root on a 15-minute time frame. You systematically move those stop losses up, and you put them at areas that make sense. But I never sell the entire position. And when I tell you guys to lock in profits, that's all on your own accord. Do whatever is comfortable with for you. I say lock in profits, half the people don't listen. I say lock in profits, and the other half of people sell their entire thing. So now I'm giving you a way to not do that. And I'm trying to explain how to stop yourself from doing that. When I say lock in profit, though, it's because it's an area that makes sense to take your money. It doesn't mean it's over. It just means that there's too many places that you guys have been a part of over the years, and I'm not naming any of these places publicly or anything like that. I'm just simply saying that there have been too many places that get way too hype, and they tell you up only, up only, up only, and then nobody sets a stop. Nobody understands support resistance. They don't understand where to move these stop losses, and then next thing you know, the rug gets pulled. And then all the people that were up thousands of dollars are now down thousands of dollars. And then they're messaging those people saying, what am I supposed to do? And then those people say, don't worry, it'll recover. That's not a fucking answer. And that's not a way to trade anymore. We don't do that anymore. So I'm going to teach you guys how to protect yourselves during runs like these, so that you guys can capitalize the amount of money that you're going to make. Stop losses work the same way with options as they do with shares. But that's a way bigger conversation, because the way that stop losses get placed are significantly different on options. But I don't want to, again, I don't want to make this overcomplicated. I want to make sure that people follow this as easy as possible. Okay? So let's go ahead and let's erase all the drawings on Root, and then let's also use a different kind of stop loss. So you guys are probably familiar with Bollinger Bands, aren't you? Can I get some yeses or nos in the chat? How familiar are you guys with Bollinger Bands? Let's see. So the Bollinger Bands, basically, what these things do is they just kind of surround price, right? They create an upper band and a lower band, and basically 95% of price action stays within the bounds of those bands. Okay, so let me turn off the moving averages. So 95% of price stays within the parameters of the upper and lower blue bands that you guys see on your screen. Now, what's interesting about these bands is putting that knowledge and that probability into context. Don't you guys think that the bands could be used as stop losses and take profits? Don't you guys think, now this is just Jackie, right? Don't you guys think that when we were looking at trades on Root, Jackie was looking at the Bollinger Bands on the daily time frame and saying to himself, boy, those things are awfully tight. Now, I hate trading Buke. I don't know why it does that. But Jackie was saying, boy, those Bollinger Bands on the daily, those things are awfully tight, aren't they? And because we know that price encapsulates 95% inside of these Bollinger Bands, right? Isn't it fair to say that if I took an entry on this, couldn't I place that stop loss just at the bottom side of that Bollinger Band? Because I know that if price breaks that lower band, right, it probably signals that we're going to start breaking down and things don't look very good, right? But if price stays in between these bands and breaks towards the upper half, and then this thing makes a complete breakout, that band can essentially be used as my stop loss, because 95% of price action stays within side of those bands. So I'm setting a stop loss betting that price isn't going to exceed that 5% in which it's outside of those bands. Does that make sense? Just a quick little thing. Does that kind of make sense to you guys? So even if you don't understand, which I'm sure a lot of you guys don't, and that's okay, even if you don't understand how the Bollinger Bands work, the most important thing that you need to know is that 95% of price action happens within those bands. And when you see price action outside of it, like right here and right here, it normally reverts back to the mean. Now, you guys have heard Jackie talk about that with the moving averages lesson, so maybe that has an importance. But you guys can see, if you look at price action within the bands just right here on this bit of price action, 95% of that price action happens within inside of it. There's a couple candles outside here. There's a couple here. There's one little mini one right here. And then a little couple right here after Root's big squeeze back in the summer last year. But otherwise, price basically stays the entirety inside of those bands, right? So couldn't we use those bands as a way to identify a stop loss or use it as a stop loss, given that we know that there's only a statistical 5% probability of price going outside of it? Don't you think that that would give you a lot of statistical probability for setting yourself up for success? Question, what about holding overnight? It's just the risk that we assume with trading. Yeah, there's not much that you can do if they gap it over our stop loss. That's just trading. And that's why I preach to you guys about taking profits early and often, because you just never know. You just never know. You could run into a stock like AMC, where Adam Aron just loves to dilute on every opportunity that the stock starts making a move up. Right, when we caught AMC down here and we thought that this thing was going to make a move, we still locked in profits and moved stops up because there came Adam Aron from the top rope to dilute on everyone, and we got stopped out, but only after we made money and moved our stops into profit. So we didn't lose money even though AMC didn't make the huge move that we wanted to see. Right, and that's why Jackie always screams at you guys to lock in profit, because you just never fucking know with these guys. You never know. Honestly, like Ryan Cohen and GameStop is like the only company that I trust not to do shady business and fuck over retail in the after hours. They're the only company that I trust. Otherwise, I don't trust any of the motherfuckers. And so that's why I'm always locking in profits and I'm always moving my stops up, because I do not trust the stock market. So give me my money. That's why I'm always taking profit. Give me my money. Right? I'm like the JG Wentworth commercial. When you have a long-term settlement, but you need cash now, call JG Wentworth, 877 cash now. You guys know what I'm talking about. Would you recommend trailing stop with 20% risk if your risk tolerance is higher? For sure. For sure. Me personally, I am my stop loss. Now, there are scenarios in which price action is super volatile, and so you've got to have the stop loss set. But like with regards to Root, I was just trading this completely organically, no stop loss, because I was just identifying each low and saying until we break those lows, I'm not doing shit. But yes, with that trailing stop loss, if you have more of a risk tolerance, yeah, you can widen it a bit for sure. But I would just say, focus on the trend. And if that trend starts to tighten that trailing stop loss. Like we can see this trend right here on Root. This has tightened a lot versus what we did right here, right? So your stop loss has got to become tighter. And that's why we got stopped out here, right? But that's why we re-entered a trade on Monday or Tuesday, whatever it was. That's why we re-entered a trade here, because this was a higher low. And so we said, if this is a higher low, maybe we go and make that higher high, and maybe we can make a huge percentage gain, right? So does that make sense, gang? Does everybody follow with me so far? Any questions? Yeah, that's right, David. I just want to make sure that all you guys are following so far. So if you could, just give me some GGs or TGs, or if you have questions, fire away, please. Okay, great. So, gonna give a super quick lesson on the day trading thing, and then we're gonna touch on macro outlook stop losses. Okay. So SPY. Okay. So SPY, if you guys were watching Jackie on Friday, we caught a wicked, wicked SPY trade. Okay. And we managed to catch this, and I want to explain how day trading works and how fast paced it is and how you've really got to be on the ball and why day trading is very much like babysitting. Okay. So, with regard to day trading, okay, day trading, whether it's SPY, IWM, Root, GameStop, whatever it is that you're day trading in the moment, you have to understand that these things move super fucking quick. Super fucking quick. And so when you guys are trading these things, you guys have to understand people are taking profits and moving stops and getting the fuck out ASAP. Okay? So what does that mean? When we're day trading SPY, we identify the areas, right, that make the most amount of sense to take an entry. Okay? So when I was watching this on Friday, all right, when I was watching this on Friday, I watched SPY come up, all right, and it hit this 0.5 Fibonacci, in which I drew that 0.5 Fibonacci from this high to this low, okay? And that's where I got these fib levels from. So I watched it reject this 0.550, and I said in this moment, now you guys all know about Jackie's indicator strategy because all of you guys are part of the Tits Gang. So with Jackie's indicator strategy, okay, something very interesting was happening, and I made a point to shout this out in the Discord because this was going to be a huge trade, I thought, okay? So as this was happening in this moment, I said to you guys, okay, there's going to be a KST cross, a MACD cross, and the RSI are all going to be where we need to see them. And they all might happen right near the center line. And if that happens, this could be a really, really powerful signal. So we're going to play this through for a minute here. And then what I said in this moment right here is I watched these indicators crawl back, right? I watched these indicators crawl back. And this is what I said to you guys, okay? I said, what we should do is wait for this thing to come back and back test this 0.5 Fibonacci. And if we want to go short on this, right? This is such an easy to manage risk to reward trade because this is our high. And this is the little micro uptrend that we've been making, in which you have your low, your high, your higher low, your higher high, and then this could be a higher low. Now, if it bounces off of this, and we're trying to identify a really good short trade, what could happen with this KST and MACD is the MACD could come back like this, okay? And then you could have a cross that happens right near the center line. You could have a cross that happens right near the center line. And if that cross happens right near the center line, you'll already have the KST cross, and then your RSI is going to be buried in the bear zone. And then that is the most powerful signal because you have the MACD and the KST crossing above center right near it, and the RSI is already in the zone that we need to see it in, right? So let's play this out. Now you guys will see it's going to bounce up here. Okay, right there. Now that's when we short it. Now why do we short it right there? Risk, reward, stop loss, okay? Our stop loss is going to systematically get placed just above this prior high. And the reason being is if we break this prior high, you will have a low, a high, a higher low, a higher high, a higher low, and then it's probably going to make a higher high. But if price fails right here, right now, this thing will roll over in spectacular fashion. It will make a lower low compared to this one, and you will watch this thing roll over, right? Now let's play it out. Okay, now we can see that so far we've had a fantastic move. Okay, so there are traders, and I'm not saying this person's name for any particular reason. It's just somebody that I trade all the time with. Calvin has a bigger account than Jackie. And so when he's trading SPY, he can take on more contracts than Jackie. And so when you catch this move and it already goes down like that, guys like Calvin are already locking in 25 to 50% of their options, because that right there is like a 40% gain on their options contract. So literally in the span of like 10 minutes, he's already made 50%. And he's barely done anything. SPY barely made a move, right? And then he's being systematically smart by moving his stop loss into break even, because he doesn't want to lose money on this. Why would you? It's already made a huge move in your direction to the tune of 50%. So let's continue to play it out and let's watch, right? Let's see if he gets stopped out. Well, hold on a second right there. There's your lower low, just as we had discussed. This is your low. This is a lower low now. So now we're going to see if price makes a lower high. And if price makes a lower high, we're going to add a shitload to our short contracts. So we're going to play it out. It's coming up. Oh, big failure. Okay, I'm going to, it's looking pretty sketchy. It looks like it's about to roll over in spectacular fashion. And there it is, right? So that was a big sharp candle, but we didn't get the full move yet. Patience, there it is, right? Now, no reason that entire time for a guy like Calvin to exit a short position. He was happy to take profit, but he did not have to exit a full amount of his position, right? Why should he? It made a lower low, it made a lower high, and then it completely it literally deleted off of Earth. And I can tell you, when we were trading these contracts, we bought them for 20 and they hit a high of like 100 and something. I think it was like 130 on that move right there. And so that was like a 430% trade that happened in about a half an hour's time. And you guys can see that now Calvin would once again, he'd be taking profit, right? But he's not going to close all of them. Why would he? What if it keeps going lower? Because you have a low, a high, a lower high. Now you have a lower low. What purpose does it what purpose does it serve him to sell his entire position just because it's insanely profitable? What if it goes lower? Then it's going to be worth even more, right? So in this instance, right, we're going to take that stop loss and now it gets placed at the systematic next high, right? This is our high, right? This is our high right here. So this is where the stop loss gets placed. And now we're going to play this out a little bit, right? So there you go, right? So now because he didn't close out the entirety of position, it even went lower. But let's continue to play it on because that wasn't a huge move lower yet. So patience, 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 patience. Still below the 236, still below the EMAs. Now above, okay, we're getting closer, there, right? Now we're stopped out. So, right, systematically, we moved stop losses, we took profit, we did all the right things, and at the end of the day, we got stopped out, and guess what happened when we got stopped out? We still made money. He had one contract left of the 10 that he originally bought, and that one contract left still gave him an extra $35. Right? And it can be that simple to trade these things. And even if we had gotten stopped out on the original trade back here, we would have lost like $10. It would have been nothing because the risk to reward was so tight, and we identified it by simply just looking at prior highs and resistance. Right? So does that quick little SPY lesson make sense? Does that make sense? Everything kind of, you guys all still with me so far, especially that SPY one, because I know some of you guys like to day trade, so I want to make sure that that kind of makes sense too, right? And then we're going to move on to Tesla, because Tesla is the good one. Tesla is the big one, and this one's the important one. And I know you guys are going to find this super, super, super helpful. So let's make sure we're almost done the lesson here for the day, guys. Almost done. I just want to do one more. I want to get onto the macro and how you guys can use a whole plethora, a whole option of different stop losses. Okay. Stop loss is mainly a purely emotional trigger for me. Yep, and that's exactly how it used to be for me, man. 100%. 100%. Yeah, it's once you understand, right? Trading stops becoming emotional, especially a stock like Root, right? When we were trading Root in the moment, it stopped being emotional for everybody because we were just looking at levels and it was like, okay, it just keeps going higher and then it keeps going higher, lower. And then it keeps going higher and then high, low, and then higher, high, and then higher, low. And we were like, okay, well, this is like easy. So Tesla. Okay, so I'm going to show you both the original trade that Jackie got stopped out on and then the trade that made Jackie a bunch of money. So Tesla, okay, this is a macro time frame. We are on a daily time frame, okay? And I looked at shorting Tesla, okay? So Tesla was back here when I was looking at shorting this, okay? And when Tesla was back here, you guys will all remember because this was a trade I laid out in the Discord a couple of times. So we had this high and this low. Lower high, lower low. And then we had this right here, right? And then this right here. So we had a question mark, right? And I said to myself, well, we're rejecting the top side of this channel, and I don't think we're going to break out. So I'm going to try and take a short here. Okay, so that's what's represented by that box. Is I'm going to try and take a short here, right? And that's what this short trade looked like. And the reason that I like this is because I thought that there was a head and shoulders that was beginning to play out, okay? Not only did I think that there was a head and shoulders, but I identified and said to you guys in the moment, I think this is a lower high. And if this is a lower high, this could be a huge trade because then we would potentially go and make a lower low. Now, we'll play this through and you guys will see I get stopped out pretty quick there, right? I got stopped out almost immediately, okay? So I went from making $100 to then I lost $100 and I got stopped out, okay? But it wasn't the end of the world because I still wanted to short this. Why did I want to short this? We never broke this high yet. This is still the quote-unquote lower high within the trend, okay? So as we were doing this, I'm looking at the RSI indicator, okay? And then let's play this through a little bit, okay? Now, wait. Okay, now right here. Now, this is where I went short, okay? This is right where I went short, okay? Now, why did I go short here? Okay, now looking at it, right, you can see that we did not make a higher high. We stayed underneath that. And so I said in this moment, right, I'm willing to take a short here and set the stop loss just above that prior high. Because why? Why would I do that? Because if you break that high, you will have made a higher high. And that will have broken this downtrend. And then this thing could start pushing to the upside. And I don't want to be short if this thing's pushing to the upside, right? That would be silliness. And so that is why I took a short on Tesla. Now, looking at the stop loss, you would say, boy, Jackie, 9%, that's a lot, right? But then you would also say to yourself, boy, Jackie, that take profit percentage, that's pretty large, right? And then you look at the risk reward, 3-to-1. Remember that, you guys, 3-to-1. 3-to-1 is the most common and it is the best starting place when you are trying to identify trades from a risk reward standpoint. If you can have a trade that has a better than 3-to-1 risk reward ratio, you are making what is considered a good trade. Okay, 3-to-1 risk reward ratio. If you can have a trade that's 3-to-1 or better, you are considered to be making a good trade. And in this instance, we had a 3-to-1 trade. Now, the other thing that happens in this instance when Jackie is taking a short position, because I took options, right? I took some options on this and I went short with options. Now, because I'm short with options, the moment that this thing starts making a move in my direction, I am moving my stop loss into break even. As soon as it makes a lower low within this little trending range of price action, right? As soon as it makes a lower low, I am moving my stop loss up because I need to protect my profit because Tesla is so volatile and it makes such large swings that it could just blow me out of the water at any point. So let's play this through a little bit so you can see, boom, right? We've already made a significant move, not even earnings yet. So let's keep it going now. Wait. Now look at this. We have made a lower low. So guess what Jackie is doing? Can anybody in the comments tell me right now? What would Jackie be doing with his stop loss after that candle that we just printed? What would I be doing? What would I be doing with my stop loss? Correct. Excellent. Thank you, everybody. Yes, I would be moving my stop loss up. I am not losing money on this trade. I am going to make money. I love money, and I don't like to give it back. And so instead of giving it back, I'm going to move stop losses up so that doesn't happen. And then we're going to press play, and then you guys are going to see that this trade was a fucking banger. Look at that, right? Look at that. Full profit target. We achieved full profit target. Yes, we got stopped out originally on the trade, but we entered again because the same theory still applied. Why did we enter again? This is a very common thing, okay? Now, you will not hear very many people discuss this because it's like an inside secret, okay? And I don't know why they make it like this, but who gives a shit, right? It's an inside secret known between traders that traders who are just beginning their journey would really benefit from what's known placing your entry where your stop loss is. Okay? Now, why place the entry where the stop loss is? Okay? Too many times, traders have the right idea, but they say to themselves, I was just a little early. I was too early and I got stopped out and then the move happened. Right? I was just too early. Right? I was just a little bit too early. And so by placing an entry where the original stop loss was on the idea that you have, you can find yourself, and this is a weird phenomenon, you can find yourself making statistically better trades. Okay? And placing that entry where that stop loss is, the reason that we do that is because that stop loss that you have in your brain is the same stop loss that Jimmy John and Gavin and Greg and Bro, they all have that same stop loss. They all think the same thing that you do because they all do technical analysis. But because you're smarter than them, you've also placed an entry at that original stop loss box because you know that, hey, even if it hits that stop loss, we haven't made a higher high. So this trade could still be on and it could still make me a shitload of money. I just have to have another entry. And so by placing that stop loss where the original trade that got stopped out was, we allowed ourselves to not only get a better entry, but have larger profits. Look at these. These are the same trades, but this one has a 6.5 reward ratio, 23% gain to the downside, versus this one that has a 5-to-1 risk reward ratio and a 26.5% move to the downside. This is the better trade that came off of your original idea to short here, but by placing an entry where the original stop loss of your trade was, you allowed yourself to have some patience, be part of the exit liquidity, and then watch this thing just die. And you guys want to know what trade that just worked on for us really, really, really well? Was Tilray. Because Jackie looked at this trade originally back here, right? I was looking at this trade back here originally. And I said to you guys that this thing loves to go from the box O resistance to the box O support, and the box O support to the box O resistance. But every time it does that, it doesn't just hit the box. No, it goes a little bit lower than the box. So I placed an entry at the box, hoping that we would see a bounce. But then I also placed another entry where my stop loss was. Because I said to myself, well, if it goes lower, it might try and wick people out for a stop loss, but it's probably still going to go up. And then look at what happened, you guys. All right, watch this. Okay, so there's my first entry. And then I was supposed to get stopped out, but I placed another entry where my original stop was. And now I buy heavy here. And I keep that stop loss tight. And then look at what happens. Off you go. And so I wasn't wrong. I was just early. But just because I was early, I protected myself. So yes, that was a good stop loss and we would have gotten stopped out. But because I identified that we had solid support here and I identified that they could wick us lower and try to stop people out, I placed an entry where my original stop loss was, and that allowed me to make a 37.5% trade. So does that placing your entry where your original stop loss was, does that make sense? Yes, poor life choices, exactly. And you guys, I encourage you to try this, not with real money all the time, obviously, but I encourage you guys to try this. Come up with trades, place these entry boxes where you think that they should go, and then place another entry box at that stop loss. And then tell me, how does that work out for you? What happened? Right? So there's a whole bunch of different ways that we can set stop losses and protect ourselves. Okay? But I wanted to try and make it a little bit easier for you guys to understand, because I know that this stuff can get really confusing and it gets really difficult, especially in the moment. Because in the moment, everything is moving so fast and everything seems really big and really intimidating and really scary. And it doesn't have to be, because it's not. We can just put these little things to rest by taking the right steps to making good trades. And the right steps to making good trades means that on something like Tesla, right? Something like Tesla, we don't trade all of the bullshit in between the highs and the lows, right? We identify those lows and we buy those lows with really tight risk. And we identify those highs and we short those highs with really tight risk. And by ignoring all of the mess in between and attacking the highs and attacking the lows, we can come out ahead every time. Okay? So guys, can I get some GGs and TGs in the chat? I think I'm about ready to wrap up this risk and reward phase. And if you have any questions or if you have any comments, concerns, or anything like that, please throw them into the chat box right away. Well, you ain't wrong, Calvin. You ain't wrong. Yes, it's recorded. Yeah. All right, folks. Well, okay, Burke Kelly, I see question. Got it in there last second. Where do you find the chart of the options value? Mine's on my broker. That's how I find all of the options values and stuff, is through my broker. Finding that information is very difficult. Yeah, finding that information is really difficult. So, how'd you split half the chart? What do you mean? How'd you split half the chart? What do you mean, my boy? Like this? Is that what you mean? What broker do you use? TD Canada Trust. Not TD Waterhouse. They're two different ones, by the way. Oh, the time lapse. Yeah, that's the replay thing. So if you have paid for TradingView, there's a replay center. And you can go back and do all that kind of stuff. Really good for practice. Really, really good for practice. Yeah, I got you now. Yeah. All right, guys. Well, if you found that helpful, thank you all for tuning in. I do appreciate that. I am going to do a more advanced discussion on risk reward management and whatnot, but I wanted to just give you guys the basics because too many people are struggling with this, and I wanted to give you guys at least just a a helping hand to get started on this, because this is something that is difficult. But the better that you get at this risk management thing, the better you're going to get at keeping your money and consistently making it rather than giving it back. Right? So, thank you guys all for tuning in. If you use TD, lots of stop loss and take profit. How do you deal with that? I don't know, cry about it, I guess. It's not much I can do, man. I don't have a day trading account, so I'm at the mercy of the market just like everybody else is. So I can't do shit about it. So thank you guys all for tuning in. I appreciate your time. Thank you all very, very, very much. We've got an exciting week. It's a short week. We've got GameStop earnings, obviously, Tuesday at the close. So I will be live for that. It's going to be a short week, you guys, and it's going to be a really fucking slow week, I think. I think this is going to be a super slow week because there's just nothing of real excitement happening within the market this week. There's no major, I'll say, economic news. There's no major catalyst. There's just nothing significant happening within the market this week. So I'm just really not sure, other than the GameStop earnings, I'm just really not sure that we're going to have any sort of significant movement. So hopefully GameStop is going to be kind of our fun for the week. But yeah, we're gonna have a lot of fun this week, you guys. GameStop is gonna provide a lot of entertainment for us, no doubts about it. So, and then IWM, SPY, NASDAQ, all the shit. I don't think any of this stuff is gonna move whatsoever all week. I think this is gonna be a tremendously, tremendously slow week. So let's make sure that we take our profits, and let's make sure that we have a lot of fun on GameStop. And so I can see people in the comments, they're asking for it. So we might as well give it to them. So guys, soon may the Tendy Man come and send a rocket into the sun. One day when the trading is done, we'll take our gains and go.